Good evening, everyone. Welcome to Closing Comments here on May 20th. Let's take a look at our charts and see how the first couple days of this week have played out. Across the cattle market, so far this week, it's been a pretty quiet week. Tight daily ranges, pretty small daily ranges, and low volume trading across Monday and Tuesday's action so far. Only trading in about a $1.50s range so far here on this August live contract to start the week. We did get an open and push above this 207.35, which was Friday's high and our bull pivot for the week. So price doesn't lie. We saw that support at that 20-day moving average, and we are seeing price just kind of balance out here in between 207 and 208.5. This 208.50 area is a multi-day high dating back to last Thursday, and also Monday and Tuesday's highs so far here coming in right around 208.5. If the bulls are able to get some bids above that, we could see this market kind of kick in and start moving higher and resume this uptrend, start this next leg back towards all-time highs, as we have seen good support here so far at this 20-day moving average. However, we are seeing just underneath the hood here, just not a whole lot of conviction from either side. Pretty loose trading going both directions here on our intraday time frame, so just not a real serious point of control here at the moment so far this week. But if we are able to get above that 208.5, we could see that uptrend kick in. We still could see a little bit more downside to start this week. A deeper pullback to this 204 to 204.75 area would be a good spot to pick up more buyers and get a little bit more of a convincing turnaround here. But whether that happens or not remains to be seen. There is going to be good support down here all the way to this 50-day moving average. So if we continue to dip from here, no need to worry. We still have some good support to come in and potential dip buyers to step in and keep this market grinding higher, as we still do have this big picture uptrend intact. So be ready for either a slow grind higher if we were able to get the ball rolling above this 208.50, or be waiting for a better price, better discounts to come in if we start to trade below some of these Monday and Tuesday's lows to start the week. We could see deeper pullback come from there. Jumping over to these feeders now. These August feeders have stayed pretty steady and tight in that near that Friday's range. We did get briefly above yesterday that Friday's high, which is our bull pivot at 298.62. We weren't able to really get much traction above there, and prices just kind of stayed steady, balancing out around this 20-day moving average, showing that we are seeing support, able to stop that selling pressure. We are seeing pretty low volume days here trading so far, just price tightening up. If we happen to get some bids above this 298.60 to 299.25, could get the ball rolling for that next leg in this uptrend to keep moving higher. This same as the fats, we still could see a little bit more of a pullback to come from here, even down to this 50-day moving average right around 291. Even in the event of that, we still do expect buyers to step in and support this market as this uptrend remains healthy and intact. So be looking for further dips to continue to be bought up, or if we do start to see some bids come in and push this market back into the threes, we could just get that next leg higher to start from here. We do have this gap between Wednesday and Thursday's action from 380 cents and 301.32. That's going to be kind of the first target. If we start to get some of those bids above this 299.25, should just mark it up, try and fill that gap, and go from there. But this uptrend remains intact, and be looking for the buyers to get the ball rolling higher here in the near term. Jumping over to our July corn market now. So far to start this week, we've had a decent little rally to a little bit of a relief rally here following a multi-week breakdown and a push down into our 435 to 440 demand zone dating back to last fall. We've seen a little bit of pushback here towards this 20-day moving average, just a relief rally here. I'd be expecting some resistance to come in anywhere in this 458 to 463 area. We did see over the last couple of weeks pretty strong selling pressure starting here on the 5th of May. And anytime we push back up into this 5th of May's daily range, we saw a lot of selling activity and rejection from there. So be looking for the bulls to keep trying to come up for air here at the moment following the big breakdown. We should be seeing resistance anywhere from this 20-day moving average up to the 50. There's a lot of room here, so I'd be waiting for prices to balance out and pause up here, see some resistance before initiating any new short position. But we should see the bears try and sell this market lower just in the midst of a pullback. Just want to see a good setup and balance before we get on board with the short train. Now over to our crude oil market. Pretty choppy start to the week so far. Monday and Tuesday's action just kind of chopping around the 20-day moving average and inside Thursday and Friday's range. Price did tighten up today, showing an inside day, and so far here in the evening session, we did get a breakout with a brief probe of that bull pivot at 63.90. We have seen a pretty good pushback from the bulls here, so if we do get some momentum above this 50-day moving average and our pivot at 64, wouldn't be surprised to see this oil market squeeze a little bit and push higher. We still do have a big picture downtrend, so it's going to be a tough road, but we are potentially on the verge of breakout territory. We still do have lots of resistance in the mid-60s here, dating back to multi-year lows, prior lows that will definitely be acting as resistance and a tough place to chew through for any upside. But for now, I just want to stay out of the way and let a better short setup step in before we commit to anything. Or maybe even see a reversal here if price really gets some traction above 64 and 65. Equity markets finally saw a little bit of downside here. Had a pretty impressive rally over the last few weeks. The S&P sold off just a little bit, nothing major. We lost our traction as we got above that bull pivot at 59.75. Selling off a little bit today. Pretty small daily range. Breakdown late in the day pushed this market down to this low at 59.26. It could be in the middle of a pullback here. However, this area between 59 and 6,000 has just got a lot of left-hand supply to chew through. Lots of choppiness that we've seen at this area dating back to the end of 2024 and the early part of the year. So following this big run up, we could see price just kind of pause up here and balance out. We do still have this big picture uptrend unfolding. We've had a nice little breakout and recaptured a lot of key levels and got above our moving averages. So if we do continue to see a pullback and breakdowns below this bear pivot at 5,900, expect price to swing down here towards this 20-day moving average to be our first line of support. And got the rising 50 and 200-day moving average as well, just beneath that. So in the event of any sort of dip here, we should be seeing pretty good buying opportunities for the start of this new uptrend that will be finishing off quarter two. That's all we got for this evening. Everyone have a good night.